What's next for gold? It's been an especially volatile time lately for gold. This is Coins Rock. Stay tuned as I explain. On September 18th, 2023, gold closed at $1,934 an ounce. It then began a slow slide, closing down every day for the next 2 weeks. With the headwinds of higher interest rates, a stronger dollar, and a strong economy, gold hit a low of $1,821 an ounce just 2 weeks later on October 5th, down over $100 an ounce. The surprise attack in Israel caused a spike in the price of gold to over $1,880 an ounce on March 12th, as investors sought a safe haven in times of geopolitical uncertainty. This was like March 2022 when Russia invaded Ukraine and gold jumped to a high of $2,069 an ounce. Gold then began a steady sell-off, dropping down to close to $1,600 in September 2022. The collapse of Silicon Valley Bank in March of 2023 led investors to once again pile into gold as a safe haven, and the price of gold once again went above $2,000 an ounce. Gold could not hold that level as the need for a safe haven diminished, and the headwinds of a strong dollar and higher interest rates pushed gold prices downward. Right now, there are competing factors impacting the price both up and down at the same time. The biggest bullish factor in the short run is the continuing geopolitical uncertainty in the Middle East. But as we've seen with Ukraine, while the war there continues, the impact on the price of gold has decreased. The biggest bullish impact for the long run continues to be an eventual decline in higher interest rates and a corresponding decline in the dollar. As inflation continues to decline and we see interest rates begin to decline, this should weaken the dollar, which should push up the price of gold. While a recession is normally bad for the economy, it would likely be good for the price of gold. Offsetting these bullish factors, both short and long term, are a number of bearish considerations. As I've already mentioned, foremost are high interest rates and a corresponding strong dollar. The latest from the Federal Reserve and Jay Powell is that rates will continue to stay higher and for longer than what was once expected. Even another rate hike is not off the table. No one can predict with any certainty when the rates might fall. Until rates decline, it's going to be hard for gold to move higher and stay higher. Also bearish for gold is weakening demand. Investor demand worldwide is down from 2022. Demand for jewelry is flat. The use of gold in technology continues to decline. The global economic headwinds have slowed demand for electronic goods, which have dropped to a second lowest level since the World Gold Council began record keeping in the year 2000. All in all, predictions for the price of gold in the short run are even more unpredictable than usual. Just when you think you have it all figured out, something like the Middle East or Ukraine or Silicon Valley Bank happens. While the short run remains unknown, in the long run the price is expected to move higher. Just how high, no one can say for sure. Again, let me remind everyone that gold is a long-term investment. Thanks for watching, and feel free to leave a comment.